We are live.
Good afternoon. Welcome to the Finance Committee. Call this to order. Can I confirm that the roll has been taken?
Through the chair, the roll has been taken.
Members of the committee, are there any declarations of pecuniary interest for the items appearing on today's agenda? Not seeing any. Okay, members of the committee, are there any items for consideration or consent that you wish to have separated for discussion purposes? Mayor Davis.
5.2.3.
Councilor Carpenter.
5.2.2.
And 5.2.3. Not seeing any others. May I please have a mover and a seconder for all items for consideration and consent items not separated for discussion purposes? Moved by Councilor Martin, seconded. Oh, we don't need a seconder. Well, seconded by Councilor Caputo.
Yeah, the items subject to the vote are 5.2.4 update on capital projects, 5.3.1 first quarter casino update, 5.3.2 quarterly reserve and reserve fund update, 5.3.3 quarterly status report of contracts awarded, 5.3.4 treasurer's annual report on lease financing agreements for 2024, 5.3.5 treasurer's investment report for 2024, and 5.3.6 the minutes. All those in favor? That carries.
Thank you. We have no delegations. We have two presentations on the agenda. So I would now like to call Jennifer Chowan and Whitney Dean of Millard's Chartered Accountants. You will now have 10 minutes to present, inclusive of questions.
Good afternoon, everyone. So today I'll just be running through the report to the Finance Committee. So in looking at the introduction, which is on page 1, the report has been prepared to assist the Finance Committee in the discharge of its oversight responsibilities, and outlines and summarizes significant matters that we thought should be brought to your attention. Moving on to page 2, we look at the auditor's report. So we've audited the consolidated financial statements of the Corporation of the City of Brantford, which comprise the consolidated statement of financial position as at December 31st, 2024, and the consolidated statements of operations, changes in net financial assets, remeasurement gains and losses, and cash flows for the year that ended, along with a summary of significant accounting policies, as well as notes. In our opinion, the accompanying consolidated financial statements present fairly in all material aspects the consolidated financial position of the city as of December 31st, 2024, and its results of operations in accordance with Canadian public sector accounting standards. We conducted our audit in accordance with Canadian auditing standards, and we believe that the audit evidence obtained is sufficient and appropriate to provide that basis of our opinion. We draw attention to the emphasis of the matter, the restated comparative information. We draw attention to note 2 of the consolidated financial statements, which explains that certain comparative information presented for the year ended December 31st, 2023 has been restated. Our opinion is not modified in respect to this matter. The auditor's report goes on to outline the responsibilities of management and those charged with governance. Management is responsible for the preparation and fair presentation of the financial statements in accordance with PSAP and for such internal controls to support those statements. Management is also responsible for assessing the city's ability to continue as a going concern, and those charged with governance are responsible for overseeing the city's financial reporting process. Our objectives are to obtain reasonable assurance over the financial statements to ensure they are whole or free from material misstatement. So as part of the audit, we have used professional judgment and maintained professional skepticism. We identify the risks of material misstatement and perform procedures to respond to those risks. We obtain an understanding of the internal controls, evaluate the appropriateness of the policies used and the accounting estimates made. We conclude on the appropriateness of the management's use of the going concern and evaluate the overall presentation and structure of the consolidated financial statements. We also plan and perform the group audit to obtain sufficient appropriate audit evidence regarding the financial information. On page 5, we discuss the independence. So as external auditors for the city, we are required to be independent in accordance with professional standards. And we are confirming that we are not aware of any relationships or non-audit services that would impair our independence for the purposes of expressing an opinion on the financial statement. Moving on to page 6, we just looked at that the transaction estimates reflected in the accounts of the financial statements are made by management, and we have looked at those estimates. We also obtain a representation letter from management at the conclusion of the audit. Other items we just wanted to highlight where there was a change in accounting policies related to PS 3400 revenue, but we have not noted any significant impact. During the course of the audit, we did not discover any misstatements that we would need to bring to your attention. Through the management is responsible for the design and control of internal controls, and we have looked at those controls and found no significant deficiencies we would need to bring to your attention. We did not encounter any difficulties in the performance of the audit, and we would like to report that we received excellent cooperation from the staff and the management of the city throughout the audit. And then the final item I'd just like to highlight is that there are a few PSAP changes coming into effect April 1st, 2026. Including the conceptual framework of financial reporting in the financial or the public sector, as well as financial statement presentation, PS 1202. We will look to discuss with management any of the impacts related to those standards as the adoption date moves closer. So I'm just going to pass it over to Jennifer to outline the financial statement.
Thank you, Whitney. I'll provide a brief overview of the consolidated financial statements. As you know, the city's financial statements are prepared in accordance with Canadian public sector accounting standards, and the consolidated financial statements of the city include the operations of the city and also the local housing corporation, the business improvement area, the municipal nonprofit housing corporation, the police services board, the public library, and new this year, the tourism development corporation. The John Noble Home is also consolidated on a proportionate basis based on the population of the city of Brantford in proportion to the entire population of the city and the county combined. Grandbridge Corporation is now accounted for as a portfolio investment in 2024 and no longer accounted for on a modified equity basis. What this means is that the carrying value of the previous investment in the government business enterprise became the city's cost of the portfolio investment in 2024. Also to highlight on the consolidated statement of financial position, financial assets include cash, receivables, land held for resale, investments, and the city's investment in Grandbridge Energy Corporation. In the investments, we see the impact of an accounting policy adopted in 2023 and as disclosed in Note 7. A certain portion of the investment portfolio is now designated to the fair value category. In the consolidated statement of remeasurement gains and losses in 2024, the city recorded unrealized gains of approximately 4.6 million on its investments, and the accumulated remeasurement gains of approximately 3.6 million on the city's investments designated at fair value are reflected in the surplus section in the accumulated remeasurement gains. Liabilities include the standard amounts such as accounts payable and accrued liabilities along with the city's long-term liabilities. In the asset retirement obligation line, we see the impact of the accounting policy adopted in 2023. Asset retirement obligations, or AROs, address the reporting of legal obligations associated with the retirement of the city's tangible capital assets. And in the city's case, this includes liabilities related to asbestos and fuel tanks and liabilities related to landfill closure and post-closure. Estimates involved in the recognition of asset retirement obligations include the actual retirement obligation cost, useful life of the underlying asset, inflation rates, and interest rates used for discounting. It's important to remember that in years subsequent, revisions to any of these amounts can change the recognized ARO. It's also important to keep in mind other liabilities that involve the use of estimates, such as the city's post-employment and retirement benefits, which are determined by actuarial valuation. Contaminated sites liability is determined based on expected remediation costs of contaminated sites, and these differ from asset retirement obligations as they don't result from the acquisition or normal use of a tangible capital asset. In 2024, the city has net financial assets of approximately $261 million, up from approximately $255 million in 2023. And non-financial assets include tangible capital assets, which represent the city's expenditures on items like land, buildings, machinery and equipment, infrastructure, and assets under construction, less accumulated amortization taken to date. On the consolidated statement of operations, revenues include taxation, user fees, and service charges, transfers from the federal and provincial governments, and other revenue sources. Expenses are presented by functional area. However, in Schedule 2 to the financial statements, segmented information is provided so you can see the composition of expenses in these functional areas. I'll also draw attention to the budget column. The budget's presented in accordance with PSAB in the financial statements, and as a result has been converted from the original balanced budget to a PSAB compliant budget, and details around this conversion are provided in Note 27. Overall, the city had an annual surplus from operations in the year of approximately $60.2 million versus $52 million in 2023. The accompanying notes are an important component of the financial statements and provide disclosures regarding significant accounting policies and additional details related to amounts presented in the financial statements. Significant changes this year include the item highlighted by Whitney, which is the adoption of a new standard related to revenue. In conclusion, we'd like to thank the city staff and finance committee for their assistance and cooperation as part of our audit. Thank you.
Thank you very much. Is there any questions from the committee? Seeing none, we'll be dealing with this shortly. Thank you. I will now ask Mary Musson, Commissioner of Community Services and Social Development, to come forward, and she's going to be speaking to the departmental review of community strategies and family supports. You have 10 minutes inclusive of questions.
Good afternoon. My name is Mary Musson, and I am the Commissioner of Community Services and Social Development. I am here today with Michelle Connor, the Director of Community Strategies and Family Supports, to provide an overview of the 2025 Departmental Service Review that was completed of the Community Strategies and Family Supports Department. The City of Brantford is designated as the Consolidated Municipal Service Manager for both Children's Services and Ontario Works in the City of Brantford and the County of Brant. The Community Strategies and Family Supports Department is comprised of 2 divisions made up of a total of 67 staff. The Family and Income Stability Division is responsible for the delivery of the Ontario Works program, and the Children's Services and Early Years Division is responsible for managing a coordinated and responsive childcare and early years system. The Community Strategies and Family Supports Department excels in service delivery. In 2024, the Community Resource Navigation Pilot was launched with a goal of reducing individuals' time on assistance and facilitating quicker exits to employment. Program evaluation is currently underway by Wilfrid Laurier University, and the pilot was awarded the Ontario Municipal Social Services Association Local Municipal Champion Award in 2024. The Children's Services Division has, through the Canada-wide Early Learning and Childcare program, reduced childcare costs for families. Since 2022, families have realized an average savings of $6,389 per child per annum, which is an average reduction in costs from $47 per day to $21 per day in childcare costs. Over the past 5 years, provincial funding from both the Ministry of Education and the Ministry of Children, Community and Social Services has decreased, however, without any local service delivery reductions. Administrative efficiencies realized in 2024 have helped to mitigate the effects of funding cuts, have increased efficiencies, and have improved the overall customer service experience. Some efficiencies include revision of the fee subsidy intake process, streamlining data tracking, updating the childcare per diem adjustment process, standardizing program evaluation, and improving the learning, earning, and parenting program referral process. Electronic document and records management has been embraced with a paperless by default initiative. The Children's Services and Early Years Division has become fully paperless in daily operations. And the City of Brantford also provides use of the online one-list waitlist system to all licensed childcares at no cost. Currently, all local licensed childcares subscribe to one list, which allows Children's Services and Early Years staff to better determine local childcare demand and wait times. Local priorities set for the Community Strategies and Family Supports Department mirror performance targets set by the province. The Children's Services and Early Years Division continues to prioritize the continued implementation of the Canada-wide Early Learning and Childcare Program and focuses on the goals outlined in the Council-endorsed Building Our Community from the Kids Up 10-year plan. The Family and Income Stability Division is prioritizing performance targets set by the province. While not yet confirmed, it is the understanding that a new funding formula for Ontario Works is under development, where provincial funding to service delivery partners will be impacted by performance target outcomes. The Community Strategies and Family Supports Department continuously seeks shared services opportunities and utilizes the contracting of services where possible and the most appropriate. This is including but not limited to rapid access to counseling, licensed childcare, early ons, and special needs resourcing. Service demand for Ontario Works has increased significantly over the past 3 years, and as of 2023, the local Ontario Works caseload has exceeded pre-pandemic levels. As of 2024, the average Ontario Works annual caseload was the highest it has been in the past 10 years. The Ministry of Children, Community and Social Services is currently forecasting an increase of 8.8% by 2026 and another 6.6% increase by 2027 in the Ontario Works caseload. This forecast does not include the economic impact of tariffs. Ontario Works performance targets measure the performance of Ontario Works service delivery partners. Locally, staff have achieved the highest percentage in the province in the first performance target and is in the top 10 performers in the province in the second performance target. Staff have little control over the third and fourth performance target outcomes, but work very closely with individuals and community partners to support successful outcomes in these two areas. Under the Canada-wide Early Learning and Childcare Agreement between the federal and provincial government, funding has been committed by the province to support 1,026 new childcare spaces in the City of Brantford and the County of Brant by the end of 2026. Once fully implemented, this will result in a 32% access rate. What this means is that by 2026, there will be full-day childcare spaces for every 3 children. With the Canada-wide Early Learning and Childcare Program, the average cost of childcare has successfully decreased from approximately $47 a day in 2022 to $21 a day in 2025. The cost of before and after school programming has also decreased from approximately $19 a day to $12 a day. Wait lists and wait times are an increasing challenge in the childcare sector. Significant growth periods in the wait list are noted in both 2021 and 2022 and may be attributed to the return of families to licensed childcare post-pandemic and to the March 2022 announcement of the Canada-wide Early Learning and Childcare Program, which motivated families with private or more expensive care to move into the licensed system. Early on, child and family centers have also experienced a significant increase in child and family participation in recent years. In 2024, child visits surpassed the pre-pandemic levels with a total of 28,546 child visits. An environmental scan was undertaken with other comparator consolidated municipal service managers, which included Wellington, Waterloo, Hamilton, Haldimand, Norfolk, Chatham-Kent, Windsor, Niagara, and Kingston. The City of Brantford has one of the largest staff to childcare spaces ratios, meaning that there is less staff to monitor or administer the system locally than in other areas. The City of Brantford staff to Ontario Works case ratio for comparable municipalities is at 1 to 51, which is the median for comparator municipalities. Some consolidated municipal service managers had a ratio as low as 1 to 38, and some were as high as 1 to 60. Social services is a shared service between the City of Brantford and the County of Brant. These recommended service enhancements are for future consideration through the appropriate budget process. The Ministry of Children, Community and Social Services is forecasting an 8.8% growth in the local Ontario Works caseload for the coming year. If the provincial government will fund CMSMs in accordance with the projected caseload growth, this translates into a total investment of approximately $717,000. Assuming that a 50-50 cost share from the province is imparted, this increase would translate to a net combined municipal investment of $358,500 cost shared between the city and county. The intent would be for these resources to be used to support a realignment of program supports and service delivery functions across the department to help meet the increased demands. In 2019, the Ministry of Education cut administrative funding to children's services in early years. Locally, the lack of funding has been mitigated to date. However, without new provincial funding, an investment of approximately $160,000 is required to maintain current mandated service levels. This increase would also be cost shared with the county. Under the current shared social services agreement, the cost share between the city and the county is 72.2% and 27.8%. The figures represented here only account for the municipal tax levy. Program delivery funding from the province is not included in these figures. The one-time variance of $193,840 in the Family and Income Stability Division in 2025 was due to an increase from one-time funding provided by the province, which reduced the overall cost to the municipal tax levy. This funding is not guaranteed for 2026 or beyond. Both Family and Income Stability and Children's Services in early years have undergone a reduction in administrative funding from the province since 2019. Mitigation efforts and the one-time increase in the Ontario Works funding in 2025 resulted in a combined 3.48% decrease in gross municipal contribution from 2024 to 2025. However, staff are anticipating that additional municipal investments will be essential to maintain current service levels. Thank you.
Members of the committee, do you have any questions? Seeing none, we'll deal with this. Oh, Mayor Davis, get it up higher.
Think about it. Thank you, Mr. Chair, and through you to Mary. Mary, I want to congratulate you and your department in that commitment to continuous improvement. You can see it in the KPIs, comparing favorably to other municipalities and showing improvement. And there's a lot of information here that's kind of hard to distill it all, but wondering if you could tell us what are the three greatest challenges that your commission faces over the next year or two?
Good afternoon, Michelle Connor, Director of Community Strategies and Family Supports. So I think the biggest challenge is the unknown. Within children's services in early years, we have inconsistent funding, additional requirements, and no clear direction as to whether or not the funding is going to keep pace with the requirements that we have. In Ontario Works, there have been a lot of changes over the past few years with social assistance renewal. So there was some offloading of some of the roles, employment supports to third party. There was an uploading of intake processes to the ministry and increased accountability for some of the person-centered supports evidenced by the performance targets, but without a clear path yet for us to determine where we're headed. It looks significantly like more work with less funding. And so those are a concern for us. I think that's the primary one is the unknown and the fund, or primary two, the work, the unknown and the funding considerations. And the third, of course, would be the impact of tariffs and the economic stability of our community, because we know that as unemployment increases, so does the Ontario Works caseload, the reliance on Ontario Works funding, and the reliance on childcare fee subsidy, and the shortage of childcare spaces available for fee subsidy families in order to maintain employment. So all of those things kind of snowballs.
And about 3-4 years ago,
Mayor Davis, we've exceeded the 10 minutes unless there's a mover and seconder to extend it. Moved by Councillor Caputo.
I can ask through my discussion period. Okay.
May I please have a mover and a seconder to place all separated items on the floor? Moved by Councillor Martin, seconded by Councillor Carpenter. We'll deal with the first one, which is the 5.2.1, the consolidated financial statements, because we had a presentation. Is there any questions? Not seeing any. We can call the vote. Oh. Oh, okay. Oh, she's going to be scrambling. Mayor Davis.
Through to Joelle. I was going through the commentaries and the notes at the end, because that's usually where you find valuable information. Do you have any comments or concerns or positive things to say in respect to, as the city's treasurer, in respect to these financial statements?
Through the chair to Mayor Davis, with respect to the statements as a whole, I think it's a positive outlook for the city. Just keep in mind when you are reviewing the statements that it isn't just the city's results. These are consolidated financial results with many of our local boards. So it isn't just city, and it is done to comply with our PSAB standard accounting requirements. So, you know, our statement of operations does show on a PSAB basis, significant surplus of $60 million. Just keep in mind that our operating budget portion of that, which we'll discuss in the next report, is about $8.9 million. But as you can see in these statements, we do have positive operational surplus in a number of areas this year, including user fees and fine revenues, significant increase in government grants, our investment income resulting from our positive investment activities that we've done through the year. You know, revenues over expenses reported for PSAB purposes include DC revenues that are realized to offset growth and some of our contributed capital, tangible capital assets. So that's when we take over subdivisions and whatnot. I would highlight on the balance sheet very positively that net financial assets have increased $6 million from last year. And looking at our combined cash and investment balances over the previous year, they've increased $9 million. If there's one thing I would caution is when we kind of look at those kind of cash balances and what makes that up, it's really kind of four buckets. It's our operational, it's what we've got tied up in our capital work in progress, our obligatory reserve funds like our DCs, and then ultimately the rest is our discretionary reserve and reserve fund balances. And when you kind of get into the details of that, and it is in one of the schedules later at the back, those discretionary reserve fund balances are declining. We did have some commentary to that in our reserve and reserve fund update report as well. It does kind of indicate, as long as some other reports that council has received lately, our updated asset management plan reporting, that, you know, really as part of the next multi-year budget cycle, we really do need to have a focus on increasing our contributions to those capital reserves to maintain our state of good repair program. But other than that, quite a positive story for 2024.
Thank you. Anybody else? Okay, call the vote on this item.
And that carries on a recorded vote of 5-0. Those voting in favor, Councillor Sullivan, Councillor Carpenter, Martin, Caputo, and Mayor Davis.
Thank you. We move now to 5.2.2, as we also had a presentation. I know Councillor Carpenter wanted this separated, it was already separated. So go for it.
Thank you. I knew the presentation was coming, but never enough time, so that's why I separated, asked questions. Let me get back to the report. Thank you. There we go. Mary, one thing that you kind of highlighted on, but well, you sort of glossed over actually, was the notable, the Ontario Works was the top performer when it comes to having in the province for one of the targets, which was making sure you had an action plan for the OOW and the ODSP. So congratulations for that. I know you said you were up there with some others, but you were one of the top performers. That's very important to note. And I also highlighted that the pressure for childcare system is, and that comes back to that shortage of funding. The administration side isn't guaranteed the funding for that process. That's something that taxpayers picking up unless we get the grant from the province. And that's what's not guaranteed.
Through the chair, in regard to the admin costs to administer, yes, that we're picking up, the taxpayer is picking up the cost that has been cut, funding that's been cut from the ministry over the past few years.
And we're also responsible for funding the Indigenous portion, right? Of some of the childcare funding, is it? You know,
Through the chair, the funding for the Indigenous led childcare and the Indigenous led early on is 100% provincially funded.
and is that funding separate? Does the federal government give us any direct funding for the federal government for Indigenous funding, or?
It is funded from our provincial funding. I'm not sure if the province has funding in turn from the feds in order.
Oh, so we don't know if
that.
it's a flow through or whether the Fed's involved in that or not.
No, it's directly through the Ministry of Education.
Okay, and other than that, then overall, quite frankly, as the mayor said, congratulations for a very well lean department that is doing a terrific job with less employees. But you have a lot, the numbers have raised. COVID's over clearly, and we're past the COVID numbers, so we're going to see these numbers increase. And I guess we're just hoping that the province keeps up the funding.
Through the chair, yes, we're hopeful that the new program delivery funding will be adjusted to account for that.
Yeah, I know the overall objective here wasn't to talk about the social services aspect of it, but the lean funding, lean management, and as the mayor said, the KPIs that you're working on. So thank you. Congratulations.
Mayor Davis.
Yeah, the question I was going to ask during the presentation was in reference to 3-4 years ago, the province reallocated the provision of the employment services. And so previously we were doing that in-house, now we refer it out. How's that working out?
Through the chair, it continues to be a little bit of a challenge. There are some hurdles working with developing that kind of seamless system. We certainly saw the benefits of doing that work in-house. And of course, when that was removed, there was a significant amount of funding removed from our budget in turn. And we do continue to provide supports to OW participants to have them employment ready before we make those referrals. Now, on a positive note, the City of Brantford just 2 weeks ago received an award from the Employment Ontario Service System Manager, which is FedCap, for being an exceptional partner. We won an award at a local gala that they had, which is regional Hamilton, Niagara, Brantford, Haldeman, Norfolk. We were the only Ontario Works partner nominated for the award, and we won the award amongst all of the partners that FedCap is working with. So that is a huge credit to the staff who have worked significantly with our partners in order to make this system work as best as possible. There are still ongoing challenges, but we are working hard locally to get those ameliorated.
Not seeing any other questions, we can call the vote.
That carries on a recorded vote of 5-0. Those voting in favor, Councillor Sullivan, Carpenter, Martin, Caputo, and Mayor Davis.
Thank you. We'll now move on to 5.2.3. Mayor Davis, you asked to have this separated.
Yeah, I do have an amendment I'd like to make, but before doing that, I'd like to ask Joelle a question. The surplus, don't want to complain about good fortune. Fortunately, we're in a position where we have a large surplus and we can utilize it for the benefit of the city and its residents. But the size of the surplus is a little unusual. What would you attribute that to? Is it we kind of overshot the mark in terms of doing multi-year budgeting and maybe shows the difficulty in projecting a budget 2 to 3 years out? Obviously efficient operations and being more efficient has got to be a factor. Any other issues that you see that are sort of systemic or?
Through the chair to Mayor Davis, when we look at kind of what the sources of the surplus is, over half of that is really not related to sort of our core operational areas. A lot of it is tied into our corporate financing area, which is difficult to budget for. So there was over $4.7 million surplus related to our supplementary taxes and some of our other tax adjustment accounts. So those are properties, tax revenues from properties that come online mid-year, weren't on the roll. It's difficult to estimate what that might be. So there was significant surplus from that area. We did also have some really good gains that were unforeseen in our investment income portfolio. Over 1.7 million. Actually, that's been updated in the investment report. Even higher than that final at year end. Because of where interest rates went and our investment activities that allowed us to benefit from some of those rates being higher than what we had budgeted at the outset of this multi-year budget process. Really, the rest of the surplus is really just a lot of ups and downs throughout our operational areas. That's really netting to only a couple $2 million of surplus through all the core city operations combined.
And one specific item, winter control. So that's snow removal and salting, sanding. We had in doing the 24 budget, we took out, I think it was $1 million out of that budget, believing climate change would likely had actually and was continuing to reduce the level of service required. And I see even despite that, we still had a $911,000 surplus in winter control for 2024. This past winter, at least since January 1st, probably a more typical winter. Do you know where we sit year to date on the winter control budget?
Through the chair. Oh, Mark's here. He might be able to address that. While he's walking up, I will just clarify that the winter control surplus isn't part of the $8.9 million surplus either. That's being reported because those savings do get diverted to our winter control reserve to help in years where we do have heavy snowfall incidents.
Right.
Good afternoon, Mark Jackman, Director of Operational Services. Yeah, so for 2025 so far, really January wasn't a full winter again. February, we did see a lot of snow. And currently, we still have November and December for next year or for this year. And we are already over budget. So just to keep that in mind.
Okay. So unless anybody has any other general questions, I'd like to.
Is there anybody else who'd like to speak to this item? Okay. Mayor Davis, you have your second opportunity.
Yeah. Okay. All right. As a short prelude to this, we've been very fortunate to have a kind of a renewal of the Boston, not Boston, the Brantford Red Sox. But it's highlighted our attention, the Arnold Anderson facility, that it needs a bit of a tender love and care that it hasn't received in a number of years. And in fact, we now have more fans coming out and greater focus and attention on that facility. And we have a team owner and team manager that's really committed to the community and making sure that team is can achieve, its best possible success. So I think hand in hand with that, we should show a sort of renewed commitment to the facility they play in. And we know that we've also received, with more fans going there, a lot of complaints about the concession and the washroom area. Also the scoreboard, which is not part of this. That's something separate that we'll hear about later in the year. Also that the Civic Center, there is the need to really kind of finish some of the renovations that were done a year and a half ago to complete what it is we're trying to do with that building, such as the back area that used to be a tin shed for equipment is quickly converted into an athletic room. But we didn't really run any proper HVAC into it, and also the insulation's lacking. So this resolution, I believe Councillor Carpenter is going to second it, is that item 5.2.3 be amended as follows. 1, reduce the amount in clause B sub 4 by 300,000 to $5,343,890, and that's the amount going into the tax stabilization fund. 2, add clause B5 to provide 100,000 for Civic Center renovations and maintenance projects, and that's more than matched by the Bulldogs. 3, add clause B6 to provide 200,000 for the Arnold Anderson Stadium washroom and concession upgrades. And I'm wondering if Kim, if you might be able to provide some further commentary for this. Yeah, I'm sorry you don't have a report, but just came up fairly quickly in the last week or so.
Through the chair, I just, Kimberly Weisgall, Director of Parks and Recs. I just wanted to say that I appreciate this motion adjustment coming forward because in the last few weeks with the ballpark being open and the amount of people coming through there, that we're having a lot of complaints about the facility. And historically, we haven't been putting a lot of funding into some of our older facilities for such as community centers, arenas, and the ball diamonds. And we want to make them aesthetically pleasing so that when people come in, it's a good experience with them. And you'll see coming in the next couple of weeks a partnership with the Red Sox where they're going to give an influx of cash because they want to encourage the revitalization of the ballpark. And it's the same with the Civic Center. And we just hope you appreciate and support this recommendation tonight.
Is there anything you want to add to the very brief explanation I gave?
The only other thing is that we currently have a leaky roof and portion of the Civic Center that we want to address. And there's some other items there as well as quite a few small adjustments that really need to be done. And we really want to take the opportunity to do that now in the summer while the facility at the Civic Center isn't being used.
And the team is making some contribution themselves as well. Well done.
Through the chair, the team is actually making a contribution that is in excess of the funding that you will be providing tonight.
Thank you very much, Kim, and thank you very much for getting on this very quickly and showing that the city can respond to concerns that and issues we're hearing from those that are using the Arnold Anderson facility. Great to see they're using it.
Councillor Caputo.
Thank you, Mr. Chair. I'll support this. I'm really excited about having Brantford Red Sox and ownership. And I think there's a lot to be said when it comes to teams and what they provide for a city and how much people really enjoy having entertainment. But it seems like we've really hit the mother lode where we've got probably two great owners in both our hockey and our baseball teams. And I think it's about time that we do something out there. And I'm hoping one day we're able to put even more money and enhance and put more seats out there and really make it a really big event. So at that point, I certainly support that going forward.
Thank you. Councillor Carpenter.
Yes, I'd echo the comments, both the mayor and Council Caputo as well. We almost lost the Red Sox. They're going through a difficult time, and this council actually supported them with some funding that got them over the hump. And we've got a owner that loves baseball, and it's going to make the team wasn't attracting a lot of fans because they weren't winning very many games because they didn't have the funding and they didn't have the resources necessary to draw players. And quite frankly, the facility is fairly run down, as we've already said. So this is going to be a step in the right direction to bringing that facility up to speed. the owner's gonna do his piece in getting some quality players. We're gonna start winning games. We're gonna bring fans back. At one time that was packed every baseball game, and we need to get it back to that. So it's as much fun as when the Civic Center is packed for the hockey games with the Bulldogs. So that's doable, and we it's good for the community. So I support this 100%. I want to say about to Kim and your team doing a phenomenal job in the community, not just on this thing that we're asking you to do here, but in general, everything that's going on in the community, like fields are being cut, like you're just doing a phenomenal job, and it's we're quick to criticize sometimes when things don't go right, but we're slow to give kudos when they're doing a good job. So you and your team and with David are doing a fantastic job. I just know that's true. I just want to put a plug in though. The other thing, Kim, can I ask you when the third baseball diamond at Cockshutt Park is going to come forward? I know it's not this year.
Through the chair, not sure when that ball diamond's coming on. We're actually cleaning up the property right now and we're looking at alternative spaces because there may need to be an environmental assessment on that property.
Because of previous use, yeah.
That's correct.
Okay.
I'll update you as soon as I have some information.
But in that ball diamond in there, just sort of in the same park, let's talk about the washrooms at the Red Sox diamond. But the other washrooms that are there, they're really inefficient. They're wooden ramp to get up for accessibility. Sometimes the washroom doors are locked because they need some work and they get stuck. In fact, the people have been stuck inside them. We put Johnny in the spots and location there. I'll be real quick. They don't work, but eventually I'd like to see that building itself have full washrooms in it, with the cricket club building be fully inside washrooms and permanent washrooms, so we can get rid of the Johnny in the spots going forward. Thank you.
Councillor Martin.
Thank you. I'll be supporting this. I think it's important that we support our sports teams. If we want to be taken seriously as a tournament capital, then we have to make sure that we provide adequate facilities, preferably top-notch facilities for our teams, as well as for teams visiting and appreciating the tournament capital idea. And it's nice to see that we've got a good surplus that we can utilize for some of these things, and without going to the taxpayers for it. So yeah, I'll be supporting this. Thank you.
I'm going to chime in before we go to second time speakers. I too will be supporting this. I remember when I first came to Brantford, the Red Sox were in the middle of their 6 championships in a row. That stadium was packed. And I've been there in recent years and not so much. And like we all know the struggles the team has gone through. I think this is a great start to getting them back on track. And we've already seen with the Civic Center, what's happened with that since we brought the Bulldogs here. So I think this is a win-win for everybody. So Councillor Caputo, second time.
I just wanted to comment on the bathrooms for the third diamond. I'm hoping that we may be able to just put that into the budget when it comes through, to put that forth and actually do it once and get it done properly. And at the same time, I still like to see about 2,000 seats brought into Arnold Anderson Park. I think we'll need them the way this owner is the way he operates the ball team. I think he sees the same vision as the people from the Bulldogs, and I think it's an opportunity for us to be able to get those people back out there and really turn us into a city of champions.
Not seeing any other hands, we'll call the vote on this. Oh, sorry, we'll call the vote on the amendment.
And that carries on a recorded vote of unanimous.
All right, Councillor Caputo, you have the floor.
Thank you. Through you, Chair, to Joelle, can we get an amount as to how much is actually sitting in our reserves prior to this close to 9 million going in?
Through the chair to Councillor Caputo, speaking specifically to the tax stabilization reserve? or
Yes, yeah.
all reserves?
No, just that's.
Okay, so after what was going to be the recommended contribution, the ending balance was going to be approximately 8.3 million. It's down, it's 8 million now. 8 million with the reduction from the last amendment, assuming the remaining funds go into that reserve.
All right, because I'm gonna be asking for some now too. And I'm gonna be the spoiled kid in the room. You know what happens when the spoiled kid doesn't get what he wants. So there's a couple of things I want to table here. And I want to bring them forward and looking at the screen here, someone has already put in an amendment for Robert Moore Park, which either very smart or they must have been able to read my mind. So I do want to make an amendment or bring forward. I'd like to be able to take from or borrow from the reserve $515,000, which is basically the sale of Robert Moore Park. And once the Robert Moore Park sale finalizes, I'd like to have that money put back into the reserves and be able to start Robert Moore Park for the residents of Ward 2. We should have money already set aside for the fact that we budgeted for the splash pad, and I think this 515,000, the designs are already done. It's just a matter of construction. So I would like to be able to look at that again, to be able to take out but reimburse when the sale of the property of Robert Moore Park now is finalized. I'm also going to be looking for $600,000 to be able to complete the Ada Avenue closure. That's been an eyesore for a very, very long time. We were able to get Palmerston done a year ago, and we had to take out of this year's budget the Ada Road. And my understanding is that that 600,000 is going into next year's budget. So I'd rather use the reserves to be able to complete that this year and eliminate that from next year's budget. And I'm seeking a seconder.
Seconded by Councillor Carpenter.
Do I do the both as one, or do I make two separate motions?
It's up to you. We can put them as one and vote separately, or you can just put them as two.
Please, one for Robert Moore and one for Ada.
Okay. You're okay with that, Councillor Carpenter? Okay. Any other speakers? Councillor Carpenter.
Speaking to the amendment on the floor for Robert Moore Park, I guess the Ward 2 council have been trying to do this for some time. And the deal for the sale of the property and the development of that property is lagging. I know this isn't in Ward 4, believe it or not. I'm not selfish that way. This is and the park across that is to be developed. It will be a big improvement to that neighborhood. Probably will spur on development actually in the area. So what he's asking to do here is sort of to borrow that money now when the park's sold, replace it back. I think we get the work done. We get going with the park, and the neighborhood over there gets to enjoy the park, the current park. And we're not putting new equipment in because we know we're going to be getting rid of that park. So it's not fair to the neighborhood to be waiting for a sale to make that happen. They deserve a park.
Any other speakers? Mayor Davis?
Yeah, well, the Ada Road, I agree that it is an eyesore, and it's an eyesore on a major artery and entrance into our city. Be nice to clean it up. It's been there looking that way now for about 4 or 5 years. Just wondering though, with Joelle, if you might comment on that, because I know that we're reluctant to use a surplus to pay operating expense, but this is really a capital expense, and I think it shouldn't cause any difficulty in future budgets.
Yes, sorry, through the chair to Mayor Davis. Yeah, that's correct. I mean, these are one-time capital requirements. There may be, we're already planning for, through the multi-year budget process, operational expenses, say related to Robert Moore Park. With respect to Ada Ave, I'm imagining operational costs once that is closed is probably minimal.
Right. And if this is approved by council next week, when could we expect the work to be done? If that goes to Jennifer.
Through the chair to you, Mayor Davis, Jennifer Elliott, Director of Engineering Services. At this time, our capital construction plan has already been completed for 2025. So this would not be able to enter into the construction schedule. It would be entered into the 2026 schedule.
This would ensure that it has priority in 2026.
That is correct. We're already working on the high priority state of good repair projects that are in the schedule, as well as staffing challenges.
Okay, thank you.
Welcome.
Counselor Martin.
Thank you. Through you to staff. I believe it was said that it was already in the capital budget for 26. So if we can't be done until 26, is this amendment not redundant?
Through the chair to you, Councillor Martin, it is at this point in the schedule for 2026. When we do go through with the readjustment of the multi-year budget, we will need to look at priorities, increases of costs, and see how that lands.
Okay, thank you.
And I will chime in too. I will support this considering Rubbermore Park is what bumped Princess Anne Park back from being done. And we're still not completed on that. So I'll definitely be supporting this. I see Councillor Carpenter would like to speak.
The only point is by proving this is that even though it's in the 2026 capital budget, it could be one of those things that get bumped out as it did get bumped out in 2025. This just assures it. And it doesn't mean that it can't be done early in 2026. You know, we get a light winter, we don't have to wait till the summer to do the work. We can still get the work done early on. And just speaking to it, a reason it came by my plate was I happen to know someone that asked me to come visit, and I asked to come down and look at the situation, which and I've heard Councillor Celeste say as well that they wanted to get this done, and the way they were going to do it, it's create a problem. Even the way it's blocked off now, it creates a problem because the last house on 3 Ada Ave is connected to the same driveway that access out to Brand Ave. And right now people are going in and out of Ada Ave via Brand Ave through those driveways. Not everybody, but it's enough that it's a problem for those two owners. And we spoke, when I spoke with the neighbors there, the neighbor at 3 Ada Ave and the neighbor that's based Brand Ave, and they have a solution that'll actually work to solve both of those problems, and they are both agreeable to it. So that's rare to have that happen. So there's a way for the construction schedule that Council Caputo knows all about how that works. So getting this on the front burner to get it done and fixing it. And as the mayor says, it's our main artery, Brand Ave, and it's kind of an eyesore at this point. And it could look very nice as part of our recommendation. And then 3 Ada Ave itself will have access to Brand Ave, and it's already zoned for commercial activity, and it will create more businesses as well.
All right, we'll call the vote on the. Oh, you want to speak again? Okay, go ahead.
Okay, and I just go back. It is Palmerston came out fantastic. It looks beautiful, and as you're driving down there, and at some point we're gonna have the bridge open so I can stop getting phone calls, emails, and pitchforks. But I just think it's there. But if I'm not mistaken, this question for you, Jen, did we not already have that drawn and quoted for construction, or had somebody already lined up?
Through the chair to you, Councillor Caputo, we did have it tendered out last year. It was a provisional section within the tender for Palmerston. So that contract has now completed, so it cannot go out in that same form as unit prices would have escalated since 2024. So it would have to be redone in a request for tender and republished out.
We can't do that right now.
Well, I mean, staff right now are focusing on getting the state of good repair projects for 2025 out that do need to proceed. So then we would need to work that into their schedule in which to get the tender reset up and resubmitted. Also on the backside, I have some extreme staffing constraints on contract administration and inspection. So we would need to try to work that into all of those schedules.
Okay. So we're still putting the two motions together? Yeah, thank you.
All right, we'll call the vote on the first one and then the second.
That carries on a recorded vote of 5-0. Those voting in favor, Councillor Sullivan, Carpenter, Martin, Caputo, and Mayor Davis. That also carries unanimously 5-0. Those voting in favor, Councillor Sullivan, Carpenter, Martin, Caputo, and Mayor Davis.
Now, are there any speakers as amended? Seeing none, we'll call the vote.
And that carries on a recorded vote of 5-0. Those voting in favor, Councillor Sullivan, Carpenter, Martin, Caputo, and Mayor Davis.
We have no resolutions, no notice of motions. We are adjourned.